Welcome, analysts and institutional stakeholders. Okay, let's dive right into this executive explainer covering Palantir's standout Q1 2026 earnings release. We're looking at a quarter that fundamentally challenges how we even model enterprise software growth and operational leverage. The numbers we're about to unpack show a company that isn't just participating in the AI infrastructure boom, they are quite literally defining its commercial application.
But real quick, before we get into the weeds of our analysis, please note that this video is for educational purposes and not financial advice. We're strictly here to examine the reported metrics, understand the operational drivers, and synthesize management's commentary.
We've got a packed roadmap today. We'll be covering 5 key areas: top-line growth drivers, U.S. market expansion, the profitability profile, GAAP to non-GAAP reconciliations, and finally, the raised full-year 2026 guidance. Let's get to it.
Section 1. Top-line growth drivers.
Palantir just reported a mind-blowing $1.633 billion in total revenue for Q1 alone. That represents an astonishing 85% year-over-year growth rate and a 16% jump just from the previous quarter. You know, for an enterprise operating at a billion-dollar-plus quarterly run rate, sustaining, let alone accelerating, an 85% growth clip is just incredibly rare. It basically tells us they are completely past the pilot program phase and are moving into massive enterprise-wide deployments.
Now, look at their operational leverage through the rule of 40. Palantir's score has absolutely soared to an unprecedented 145%. If you track the upward trajectory from Q2 of 2024, the score has essentially doubled in just 12 months. I mean, they didn't just achieve the metric, they effectively broke the scale.
And the context from CEO Alex Karp here is absolutely critical. He stated that they've shattered the metric, a feat matched only by fellow AI infrastructure companies like NVIDIA, Micron, and SK Hynix. By saying this, he is explicitly repositioning Palantir in the minds of institutional investors. They aren't just an application layer anymore. This places them in an elite category of foundational AI infrastructure companies experiencing paradigm-shifting market momentum.
Moving to Section 2, U.S. market expansion.
The U.S. business is really the primary catalyst here. Total U.S. revenue more than doubled, showcasing a 104% year-over-year growth rate to reach $1.282 billion. While global commercial and government revenues are growing at a very respectable 95% and 76%, it is the U.S. market that is the absolute powerhouse, pulling the entire global average upward.
Let's break that down a bit more, because the dynamic between the commercial and government sectors is fascinating. U.S. commercial adoption, which is heavily driven by their AI platform, AIP, actually outpaced an already formidable government sector. U.S. commercial revenue shot up 133% to $595 million, while U.S. government revenue rose 84% to $687 million. And even more importantly for future modeling, they locked in a massive $1.176 billion of U.S. commercial total contract value. That's locked-in future revenue, up 45% year-over-year.
And the velocity of new customer acquisition remains extremely strong. U.S. commercial customer count is up 42% year-over-year, hitting 615 organizations. We are seeing a real compounding effect here. They're landing larger contract values while simultaneously accelerating how fast they onboard brand new enterprise logos. This is literally the textbook definition of crossing the chasm in B2B enterprise software.
All right, Section 3, profitability profile. Let's look at the bottom line. The translation of all that revenue into true GAAP profitability is just exceptional. We aren't even talking about adjusted numbers yet. GAAP net income reached $871 million in Q1. Against the top line of $1.63 billion, that is a massive 53% margin on a generally accepted accounting basis. It's just a remarkably aggressive and consistent trajectory.
Institutional investors are going to immediately recognize the strength here. Cash is king, right? And Palantir's adjusted free cash flow hit $925 million in the quarter, yielding an incredible 57% margin. Plus, they ended Q1 with an absolute fortress of a balance sheet, $8 billion in cash, equivalents, and U.S. Treasuries with absolutely zero debt. That gives them immense optionality for strategic investments, aggressive hiring, or M&A activity without needing to tap into expensive capital markets.
Section 4, GAAP to non-GAAP reconciliations.
Now, this reconciliation is absolutely crucial for understanding their operational efficiency. So GAAP net income was $871 million, while adjusted net income was slightly lower at $856 million. That's primarily due to the complex interplay of tax effects and valuation allowances. But look at the operating income. GAAP income from operations was $754 million. When we adjust for non-cash expenses, specifically stock-based compensation and related payroll taxes, we arrive at an adjusted income from operations of $984 million. That represents a blistering 60% adjusted operating margin. They are scaling revenue at 85% while simultaneously throwing off a 60% operating margin. That is the actual engine behind their 145% Rule of 40 score.
Section 5. Raised FY 2026 guidance.
Palantir isn't just maintaining their trajectory, they are significantly raising guidance across the board for the full 2026 year. They've bumped total revenue guidance to a tight range of $7.65 to $7.62 billion. They've explicitly raised U.S. commercial revenue guidance to be over $3.224 billion, and they revised their adjusted free cash flow expectations upward to a massive $4.2 to $4.4 billion for the year.
This builds a completely clear thesis of an accelerating market. What really stands out to me here is the specific call-out for U.S. commercial revenue, projected to grow at least 120% over the full year. That signals extreme management confidence, all while expecting GAAP operating income in every single quarter. High growth absolutely does not have to come at the expense of consistent, reportable profitability.
So I leave you with this big question. When a software firm consistently outputs a Rule of 40 score of 145% and pairs it with 60% adjusted operating margins, traditional enterprise SaaS multiples just break down. The market is going to have to decide if Palantir is truly in a category of one.
How will this unprecedented margin profile and hypergrowth rate shift the institutional consensus on AI infrastructure valuations moving forward? Thank you so much for joining this explainer. Like and subscribe for more videos.